We have Mr. Conrad Saldanha, the MD and Portfolio Manager at Neuberger Berman, who joins us on the show. Hi, Mr. Saldanha. Good morning and good to see you win. If I'm correct, I think you managed close to around $5 billion odd, and I think 20-25% of that is towards India. Are we getting those numbers correct?
That's correct.
All right. And I'm just looking at the bottoms-up approach that you've had. And this week itself, you've participated in a couple of fundraising plans, as well as you participated in a large block. One of those names is CMS Info, which, by the name of it, it looks like it's a cash management company. Though they have been diversifying, and a lot of their money now doesn't come from core cash management. Give us your view on that one. That's the one that's up close to on 6%. So I thought, first up, let's ask you about the latest large trade.
Sure. So in terms of CMS or cash management, it was previously known as, I think people exaggerate the demise of the cash business, which was their legacy business. That's still holding up pretty nicely. But as they look to diversify and become more even into collections in new areas, and I think what we're backing again is a very solid management team that's executed well. This was obviously the last cleanup trade that came from the PE investor, so that created that opportunity on a business in our mind that's going to grow at 20%, and you can buy it in the upper teens in terms of price to earnings multiples. So it looked very attractively priced for a business for us that's going to grow, expand its TAM over a period of time, and is backed by a very strong management team.
Mr. Saldanha, hi, good morning. I mean, actually, before we hit air with you, we were just discussing that here. And it's interesting to note because, I mean, the impression generally is that cash management is in fast decline. And that's the impression I had as well. And I was wondering, what's happening now. But yeah, good to hear that. So when I look at the holdings that you have, you got not all, but you got the large banks, and you seem to be very bullish on the on manufacturing as a theme. Right, import substitution seems to be a common thread running across a lot of the holdings there. Let's just talk about banks first. I mean, because that's been the one area which has, over the last 2 years or so, taken a bit of a backseat, especially some of the larger names. What is your own assessment of what's the roadmap from here? Names like Asia in particular, a lot of interest, a lot of debate, whether it'll get back to winning ways or not. And whether the best is behind. How do you think about that question?
Sure. I think the bank left out, right? Especially the private sector banks in the last rally that we've seen in India, rightly so. Given that obviously there's liquidity tightness here, the Reserve Bank of India holding the line. Obviously, when you see a tremendous GDP print in real terms, you have to do a double take of 8.4%. There's a little bit of hesitancy on the Reserve Bank of India in terms of easing, given also the external factors. Now, the biggest issue for the banking sector is going to be growth, right? And they have been concerned, or at least the Reserve Bank has been concerned, on smaller ticket loans, how much of that is flowing into the market, how much of that is actually going to consumption. Reality is consumption actually hasn't been that strong, right? Especially in rural. So there's a bit of hesitancy, and that's put this overarching kind of dampener on the banking sector. To your point, and you referred to HDFC, and I think that's was the cream in the sector, still has a great franchise, and you've got these two big entities coming together and merging. That's going to be a 3-year execution plan. So I think people are just way too myopic. My sense is that management probably, in terms of communication, could have probably done a better job of just emphasizing the long-term nature of building out the franchise, and in the near term, people are going to watch them in terms of deposit mobilization and how they do on the loan growth side and not lose market share. So there are a few monitorables. I think people got too obsessed with the last quarter. And I do think that if India has to grow, and has to grow at, even if it's not the 8.5% and it's sustainably above 6%, the banking sector has a key role. It is getting more competitive, but I do think that it's left behind this rally. It might take a quarter or two, but I do think that some of these private sector banks are extremely well run, and they will benefit from the economic growth.
Okay. Conrad, hi, good morning, and thanks for joining in. The other stock that you have in your holdings is Tube Investments. And we were just talking to CG Power, right? The cabinet has approved the establishment of 3 semiconductor units. Of course, it's a long gestation period project, so it'll take 3 years for the plant to come on stream, etc. But what is the kind of opportunity that you see here for companies like CG Power, even, I mean, for the group as such, since you have tube investments in your portfolio?
Sure, and you're right that CG Power is a big driver of the tube investment case, right? Apart from financial services, this is a massive runway, and we're super bullish on manufacturing, localization in India, and just self-sufficiency, right? We've seen how well Taiwan has done. Subsequent to that, you saw China ramp up very successfully, and having visited and invested in companies in that area of the world, I genuinely believe it's a long runway, but keep in mind that it's also a long journey, right? So you're going to have missteps along the way. I think CG Power with Renaissance, how they've teamed up with, I think that makes a lot of sense. Getting the IP, getting the skill set, getting the precision down in manufacturing, that's going to be super important, whether we tie up with the Japanese in India or with the Taiwanese companies. I think that's going to be the way forward. I would say, Keynes is another name we've owned. I think they're executing well. So there's going to be a few winners in this. And more recently, we had a transaction with Xpro. You can get into the components of this too for electronics, dielectric films. Capacity is going to grow threefold for these companies. So I do think it's a good runway, but getting the winners is going to be a little tricky because it's not going to be one straight line. This is definitely a long gestation progress from moving from PCBA right now, which is PCB assembly, moving up the value chain into actually PCB assembly, notebooks, PC, then into servers. So it's a very long runway. And I think the government's done a phenomenal job of opening up the sector, localization, doing the PLI schemes and getting this ecosystem going. You definitely need that. Now it's into the private sector's hand to really take it and run with it.
All right, Mr. Saldanha, good to hear your thoughts. You're sounding very, very optimistic about the manufacturing space as well. And we here as market commentators, we often talk about the amount of money that's being raised from the equity markets. I'm looking at your participation. You've been participating across some of these mid and small cap companies as well. Wishing you all the best and looking forward to chatting up with you in the time to come.